Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 16th of September. Looking like it's going to be a fairly busy week. We've got a fair bit of corporate news coming along in the UK and a fair bit of economic news coming along elsewhere. One of the reasons that we've seen the continued rise in markets is a perceived thawing in the China-US trade spat, as well as hoped further monetary easing from the central banks. With the central banks in mind, we are expecting an update from the Bank of England's Monetary Policy Committee next week, and in particular from the US Federal Reserve, where a further interest rate cut, is widely expected. The outcome of all those things together has meant that in the year to date, the US markets remain strongly ahead. The S&P 500 up 20%, the Dow Jones Industrial Index is up 16%, and the Nasdaq continues to fire ahead, up 23%. Even the previously beleaguered FTSE 100 is still up 9% in the year to date. Turning to the FTSE 100 next week, we have updates from three interesting names. We've got a third quarter upgrade from Ocado. This has been a pretty stellar share price performance. Shares are up 43% over the last year. In fact, if you go back 2 years, the shares are up 334%. Obviously, they've transformed from just being a grocer, a retailer, into very much a cutting technology stock, and a couple of their transformational deals have involved the likes of Kroger in the US and Marks and Spencer, of course, more recently in the UK. So expectations will be high in terms of that particular trading update. There's also half-year numbers from Kingfisher. This has been a stock which has been rather more under pressure. The shares are down about 15.5% over the last 6 months. Usually what we're looking for any update from Kingfisher is how they're getting on with their transformation plan, whether the troubles at its Castorama unit in France are still persisting, and equally whether the success of its UK arm Screwfix is still underpinning performance in the business. Finally, we have half-year numbers from Next. They actually had a profit upgrade in July leading into these half-year numbers. The shares are up around 16% or so over the last 6 months. And as usual, a big contributor to that will have been the online division. So those are the kind of things that investors will be looking for. Thanks very much for watching. Have a good week.